Energy stocks are leading all other sectors in 2025. This sector is made up of big oil companies like Exxon and Chevron, as well as companies that get the oil or the natural gas from one place to another, that do the transportation and transmission of these energy resources, and services companies, as well as exploration companies like Oxy. Collectively, all these stocks have been outperforming all other sectors. When you compare energy stocks to technology stocks, they're going in opposite directions. You have energy stocks year to date up 8.39%, and you have technology stocks down more than 10%. So it's a real winner to be in energy stocks. I wanted to make a video and highlight companies and show you the fundamentals that these companies have. And I think it's a great opportunity to buy into this complex. I'm currently a Chevron stockholder, but I'm really weighing the options to get into a second or third energy company, especially a smaller one, maybe an exploration company, maybe a transportation company within the complex. Let's take a look and let me show you what I'm seeing within this sector. The biggest oil companies are ExxonMobil, which is $516 billion in market cap. Number two is Chevron at 294. You can see that there's some pretty big cap companies in this particular sector. I took a look at the companies and I ran a screener, and I'm really focused on companies that are above $1 billion in market cap. They have a forward PE and a current PE above 4. That way I can weed out unprofitable companies. And I can also sort by the earnings yield, the free cash flow yield. Right now I'm looking at free cash flow yield. And this company here, I believe they're in Europe. They're doing really well. And that's interesting. The petroleum company in Brazil has a very good free cash flow yield. Shell has a very good cash flow yield. Valero, Suncor, Marathon Petroleum, British Petroleum, Plains, and this is I believe, a partnership that you would be buying into in Plains All American Pipeline. Energy Transfer. So these are looking fairly interesting. Diving a little deeper just to see what kind of companies one would invest. Exxon is the biggest market cap. And this is a company that you're buying the company for less than 2 times revenue, which is cheap compared to other sectors. The forward P is only 16. That looks good. Pays a nice dividend of 3.3%. Analysts believe it is discounted. And year to date, Exxon is doing well, up 10.5%. And again, they pay a dividend. So you're winning two ways. The other company is Chevron. Chevron's up 15%, pays a 4% dividend. Forward P is 16.24. And we're going to go smaller and smaller as we go. Enbridge, forward P of 20.7, really high dividend of 6%. And year to date, they're up 4.4%. So this looks pretty interesting. Enbridge handles the movement of energy products. For instance, let's say the oil is extracted in Canada and they need to move it down to Houston. Enbridge would use its infrastructure to move that oil from one place to another. And they are really performing well. Energy Transfer is in the same type of industry, providing the infrastructure to transport and store energy. And year to date, this stock is down 5% over the 1 year. It's up 18%. Pays almost a 7% dividend, and it has a forward PE of 12.69. So I'm revealing companies where if you compare these fundamentals, PEs, and you look at how much a stock has appreciated over the last couple of years, the energy sector is showing some really promising valuations. These companies are valued fairly or maybe discounted, and they're really delivering results in 2025. It's not a bad idea to be thinking about energy companies. Kinder Morgan, one more company around the pipeline and transfer industry, and they are a 22 forward PE, 4% dividend, year to date up 4%. For the 1 year, it's up 55%. Wow, what a winner. Hess is more of a retail, what they would refer to in the energy complex is downstream. Upstream is where you extract the oil. Midstream is you refine it. And then downstream is you're selling it to the customer to put in their car in the form of gasoline or diesel. Hess is going through a process of potentially being acquired by Chevron, and their forward PE is 20, very low dividend. And over the year to date, the stock is up 20%. Very nice. Over the 1 year, it's only up 4%. So that is interesting. Warren Buffett has put a big investment in Occidental, and Occidental will make money when you have high oil prices. They're principally an upstream company where their business is to find oil, extract oil, and then sell it in its crude state. They don't refine it and they don't sell it downstream to retail customers. And they have a forward PE of 14.6, dividend of 2%. Year to date, the stock's pretty much even. Over the 1 year, it's down 24%. As oil prices go up, this would be a really good idea because this stock is really going to flourish if oil prices continue to rise, especially if they hit 75, $80 a barrel. Oxy's really going to rally. So I've talked about the fully integrated companies like Exxon, Chevron, that pretty much do everything. They know where to extract it. They have refineries that refine the product, and then they even have operations that sell it to the retail customer. We have companies that handle the transmission of energy. They handle the movement of oil from one area to the next, getting it over to refineries and so forth, even storing it. We just went over an upstream company in Oxy where they're in the business of finding it, extracting it, and then selling it as a raw good. Now let's talk about companies that provide services into the energy complex, and Baker Hughes is one of those companies. So they provide services so oil companies can find oil, extract oil, and put it to market. And as oil prices rise, this isn't a bad idea to be ahead of this one because they're going to rally as oil rallies as well. They're up 31%. Very nice rate of return. They pay a 2% dividend. They have a forward PE of 17. Analysts still think they're discounted by 14%. In addition to Baker Hughes, Halliburton is a company that provides services specifically around fracking. If you understand that process, where they go to areas where the oil is somewhat absorbed into the shale or to the sand, and they, through pressurized processes, they can extract that oil. And as oil prices rise, you will see Halliburton rally because they will be hired to help these oil companies extract oil that is harder to get out, but it's worth doing when you have high oil prices. So Halliburton is another services company. So that's a quick tour of the oil complex. It is really worth taking a look at because the returns are there for 2025. And I will be doing my homework on some of the smaller players. I'm a big Chevron stockholder. I'm good with that investment, but it'd be nice to add maybe a second or a third element to my investment, or maybe go into this ETF that is pretty much going to give me a access to the market as a whole. And it's been doing well. It's not bid up too bad over the last year. Maybe this one here gives me greater exposure to energy in a year where energy is really outperforming the rest of the market. So that's my video on the energy complex, oil companies. Hope you found it interesting. Hopefully, it gave you a few ideas to consider. Keep in mind, I talked about a number of companies. I'm not recommending you buy, hold, or sell any of them. I was just sharing my opinion on all of them. And this is not financial advice. So thanks again for watching. Good luck investing.